What's up, guys? Hope everybody's doing good. So today we're going to be talking about the 3 reasons why you don't trust your trading strategy. Now, this is one thing that took me a long time to realize. I would always find myself every day after I finish a trade going onto social media and taking a look to see how every other influencer did on the day. All the people that trade the same strategy or similar strategies to me, I wanted to see whether or not I took the same trade that they did. This is one of the biggest signs that I noticed in my own trading when I first started, that I didn't fully trust the strategy and my ability to be able to repeat that on a day-to-day basis. The reason why this is so common for new traders to do is because they don't have their own data collected to be able to go back through their journal and see their system fully play out. Now, the point that I realized that this went away in my own trading, that need for validation, looking at other traders to see if they took the same trades as me, was after I went through what I call the full cycle. Now, what this full cycle is, it's basically seeing your system play out in the prop firm space from start to finish. So as you know, when you first start trading, your goal is to pass that first evaluation. You're taking it slow usually, and you might fail a few accounts. You might keep blowing them. You can't get funded, right? You haven't seen your system play out to be able to pass an evaluation. But then once you're in it long enough and you finally pass your first evaluation and get funded, now you've seen a little bit of proof of concept. You know that your system is actually capable of passing an evaluation. So your next goal is getting an actual payout. But typically, just like in my case, I blew my first funded account. Most people don't get payouts on their first funded account because your emotions typically change. You used to just trading on an evaluation that doesn't actually have any monetary reward when you pass it. But in a funded account, you now see, oh God, if I get this many winning days, if I make this amount of money, I'm actually going to get a payout. So now your psychology changes again. So this cycle continues until you get your first payout. Now, what have you seen? Your proof of concept from not being able to pass an evaluation to being able to pass an evaluation, get funded, then get a payout. So you've seen your system actually play out and work all the way up until that point. So now the cycle doesn't end here. As you know, when you get your first payout, this doesn't all of a sudden mean that you're a profitable trader. So what I noticed was it wasn't until I went through this full cycle many times to where I was confident enough in my system and I've seen it play out. I've journaled all my trades to where I was fully confident in my trading strategy. Because now I know that after I blow those funded accounts, because it's inevitable, all profitable traders blow funded accounts just like everybody else. But until you've been through those cycles multiple times and you've seen your strategy play out, you can't be confident and trust your trading strategy to the fullest. Because now that I've been through that so many times, I know that after I blow my accounts and I have to go back to the eval stage, I have the data in my head and in my journal that I've been through this before and I've made it out. I've passed the evaluations. I've gotten to the funded stage. I was able to stay disciplined enough to get a payout and repeat the process all over again. And that's one of the most difficult parts about trading, because when you're new, you do not have the proof of concept to be able to think back to when you were struggling, but you actually did make it out because you've never done it before. And until you do, it's extremely difficult. And you can't just do it once, you have to do it over and over and over again until you're so confident in your strategy that you no longer are seeking validation from other people and you trust in yourself more than you trust the input of other people. So continuing off this, the second reason why you don't trust your trading strategy is because you haven't removed your own error from a profitable strategy. Now, there's tons of different strategies that you can trade, from IFEGs, ICT, whatever you trade. Personally, I trade ICT, I trade continuations. I'm looking for displacement towards an obvious draw on liquidity with a protected stop loss. That's it. It's super simple. The strategy can be taught to anybody within a day and they can understand it. But what's most important is that you're removing your own error from a strategy that's already profitable. And honestly, guys, this is just something that takes time. There's no real answer to this. And for different people, it's going to take different lengths of time. There's people that become profitable in 6 months, and there's people that become profitable in 5 years. And really what it comes down to is you removing your own error from this strategy in order to see results quicker than other people. And the faster that you're able to do that and take control of your own emotions, the quicker you're going to be able to see consistent profitability. For example, like I mentioned earlier, I trade continuations. I'm not going to take a trade if there's a reason for the price to come back above my stop loss before continuing to my draw on liquidity. For example, if we have a 5-minute fair value gap above the swing high that I place my stop loss at, there's a reason for price to come back and tap it before continuing towards my draw on liquidity. So I'm not going to enter that trade. But if I was impatient and I got this feeling of missing out on the trade and I entered anyways, and then price came up and stopped me out because it had to tap into that 5-minute fair value gap before continuing lower, then that's going to be an example of error that I need to remove from my own strategy to be able to see consistent results. These are the things that are going to slowly increase your win rate over time, and you're going to understand certain scenarios which are going to increase your win rate if you avoid them. And that's really what discretion is at the end of the day. It's seeing certain patterns in the market repeat themselves over and over and over again to where you're able to make a sound judgment to avoid entering a trade under those conditions or entering a trade based off of certain conditions. Now, this transitions perfectly into my third point, which is that you don't have enough screen time. Once you've been trading for a long period of time, you start to understand how the market moves in certain market conditions. For example, if we pump 1,000 points pre-market or in the overnight session, typically the New York AM session is not going to be great. Why? Because we've already moved so many points and there isn't really a clear draw on liquidity to where we can target. So that's just one example of something you're going to see over and over again and a certain condition that you can avoid. Now, when you avoid these, that's going to increase your win rate. You're no longer going to be taking trades in low probability conditions. And this is just going to be built up over months and years of trading, and it's only going to get better the longer that you do it. That's why journaling your trades is so important, because you can go back to certain months and you can see exactly how you performed based on certain market conditions. All of this added together is just going to allow you to be so much more confident in your trading strategy because, again, you have all that data collected and you're able to go back and know that you were the one that was able to perform in these conditions. Now, screen time doesn't mean that you're copying trades off of somebody else. For example, this is exactly why signal botting and discords and stuff on other people's live trades is not a good idea. Now, I'm not saying that live trading and discords is bad, because there's tons of things that you can learn from profitable traders by watching them, but it's typically best for a shorter period of time, or just doing it for maybe 1 or 2 days of the week and then taking trades by yourself on the other days. In order to develop quality screen time, you have to be placing trades yourself and building conviction in your own setups. That's why it's never good to go back onto social media after you take a trade, because it doesn't matter at the end of the day. As long as you had conviction in your own setup and you're confident that you're able to repeat that process over and over again, that is what's going to allow you to trust your trading strategy. One thing I personally noticed after developing more screen time and trading over this past year was that I've reached the point where I'm more confident in my own ability to trade than I am trusting other people. Now, this might seem super weird to people that are new to trading because there's lots of things that they're still learning, but it's going to be a certain feeling that you get that you can almost understand the market without actually having a set trading strategy. What I mean by this is you're going to start looking for where the market is actually going first before you think of your trading strategy or entry model, because so many people think about their entry model first, like, oh, I trade IFVGs, so I'm looking for an IFVG all the time. Like, I remember when I first started trading, I was always thinking about my entry model first and not where the market is most likely going or the conditions that we're in. And this becomes so important because you're going to realize that, okay, the entry model doesn't matter at all. I just need to understand the specific conditions that we're in and where the market is heading. And then I just find a safe entry with a protected stop loss towards that draw on liquidity. And that's basically what my entire system is based around, right? So just a quick summary of those 3 points as to why you don't trust your trading strategy. So the first one is that you haven't been through the full cycle. You haven't seen all the successes and failures that you need to go through in order to trust your system. Like I said, that's from the eval stage to finally passing your first eval and getting to the funded stage, and then finally getting a payout from there, blowing it, and then resetting to the eval stage and repeating the process over again. You have to go through that multiple times in order to fully have conviction in your own strategy. The second one is that you haven't removed your own error from an already profitable strategy. Like I said, this is going to be things like not trading on certain days that have low probability conditions. And by doing so, it's going to slowly increase your win rate over time because you're going to be waiting for those A+ setups in the best market condition. And then once you see that win rate increase in your own ability to perform that, you're going to have way more confidence in your trading strategy. And now the last one is that you don't have enough screen time yet. And now this is a tough one because you can't really teach it, right? You have to just see the market over and over and over again for yourself and slowly build conviction in your own ability to execute those trades. Now, it completely depends on how you view the market and your own psychology. Now, for me, around like 8 months into trading or so is when I really started to build conviction in my own ability to trade. Because at that point, I've seen multiple different types of market conditions. I have a good amount of data collected in my trading journal, and I'm able to go back and see how I performed and read through all of the psychology notes that I've written down and why certain trades have not worked out and why certain trades have worked well. And then I've also been through those cycles. I passed my first evaluation, blew that account, my first funded account, finally got payouts, and then was able to repeat the process over and over again up until this point. And I've seen my strategy play out. This is exactly why so many people on YouTube and social media always say that the strategy itself doesn't matter. And now, I wouldn't say that's the case 100%. Like, obviously you need some sort of system that's repeatable and that does yield profitable results. But like I said, you can teach somebody the strategy in only a couple days, but that doesn't mean they're going to be profitable all of a sudden. That just proves to you that conviction and discretion in your own trades and your own ability to trust your system is actually the only thing that's going to make you profitable at the end of the day. What I want you to do is just keep this in mind when you go into trading on Monday, and really just look for those quality setups that are going to increase your win rate because you've eliminated low probability conditions. If you guys want to know exactly how I track and journal all my trades, there's a link in the description below where you can join my free Discord, where you can get my completely free trading journal that's going to allow you to see exactly what you need to improve on a day-to-day basis, allow you to go back and see exactly how you perform during certain months, and just see that linear progression of your win rate increasing over time, as well as allowing you to build even more trust and conviction in your trading strategy. So with that being said, guys, take these 3 points and just understand that the more screen time and discretion that you build, the more trust you're going to have in your trading strategy over time. And that's what's going to make you profitable in the long run. So we'll see you guys in the next video. Enjoy the rest of your weekend and have a good one.